Hello everyone, can you guys hear me? See that many of you are already present. See Greg, Mark, Marcel, Aaron, Abdullah, Chester, Cameron, Ansgar. Nice that you're here as well. There is a chat functionality, so on the I think on the right side of your screen. Hey Edward, can you hear me or not? Cool, perfect. Fino says yes, Jensen, Alejandro, that's fun, John. Wow, many people. We'll just wait a couple minutes for everyone to enter, because I see that still more people are entering the room. So while we're waiting, it's always interesting for me to hear where all you guys are from, because I see a lot of different names coming by. I see Spanish sounding names, a lot of English names as well. So where are you guys from? Nick, Gia, Jericho, Michael, Cole Jensen. Okay, hi Gert. England. Edward, I'm using Webinar Jam for this. It's really great webinar software, in my opinion. Florida, Quebec, Germany, Los Angeles, New Jersey, London, Switzerland. Wow, Singapore even. S- France, Netherlands, nice. Iowa, Bay Area, Kansas, Toronto. So we're some people from Canada here. Nice. So there's quite a yes. Lorenzo is from Spain. So there's quite a mix here. Quite a mix of people here. Bahrain, Madrid, Masters in Finance, Siddiq, moved to Texas. New York, Chicago. Fabian, the webinar will last about an hour. In that hour, I'll try to teach you guys as much as possible and show you some interesting tips and tricks. And yeah, I hope you can learn a thing or two from it. Peru. Aaron, you can't hear. Maybe try to re-enter. So close your window. Oh, it doesn't do anything if I tell it to you then. So let me see. Aaron. Hmm, Okay, let me see how many people are here now. 81. That's quite a nice number. Let's just get going, I guess. San Jose. Wow, it's a place I would love to visit. Okay, yeah, let's get started. Let me get everything in order. Okay. Yeah, so welcome everyone to the How to Analyze Stocks the Fast Way webinar. Um, this is myself. It's an old picture. My name is Nick Kraakman. I'm the founder of valuespreadsheet.com, as many of you might know. I'm a bit hairy in this picture. I shaved it off recently, so I look a bit different now. But let's see. Okay. Yeah, there we are. Sorry, I was PowerPoint wasn't really working with me. Okay, so again, I'm Nick Kraakman, founder of valuespreadsheet.com. I'm very excited to be here with you today because it's been a while since I did a live webinar, and I know that people value it because there's one-on-one interaction. Um, Jericho, can you still have a brokerage account at 14 years old? I could have one because my parents signed off on it, but usually you can only start a brokerage account when once you're like 18 or something. Maybe in the States it's even higher. I know that the drinking age is a bit higher in the States. So why are we here today? Well, I will show you how you can analyze stocks in a very fast way. And I'll even let you guys shout out some companies that I will then analyze for you on the spot. That's how fast it will be, these analyses. Obviously, they will not be like immensely comprehensive, but it will be a still a thorough analysis in just a very short time. So I will teach you how you can do that as well. And yeah, at the end of this webinar, you will know exactly how to analyze stocks in a quick way and calculate their intrinsic value as well, which is, as many of you might know who have already bid value investing, know that intrinsic value is a very important metric. I am from Amsterdam in the Netherlands. It's a beautiful city, and it does not mean that I smoke weed all the time. English is not my native language, so I mean, apologies in advance if I happen to ruin some grammar here and there. I want to make this webinar interactive, and yeah, many of you have already found the comment section, so that's great. I will try to keep an eye on it, but I also have to tell my story. So, there will be plenty of room for questions, and if you have one, just ask it in the comment section, and I will see if I can answer them right away if it fits in the story, and also I'll answer them later on. Um, yeah, so let me see what else. Yeah, in the coming hour, I'll try to teach you as much as I possibly can, and after that, I show you how you can get more help if you wish. And yeah, there will be plenty of rooms for questioning during and after the webinar. But for now, let's just get started. Yeah, as most of you will know, this is Warren Buffett, one of the world's greatest investors of all time, and currently I believe the third richest man in the world. And what he said was that whether we are talking about socks or stocks, I like buying quality merchandise when it's marked down. And this quote is really one of the most concise ways to explain what value investing is all about. Value investing, for those of you who don't know, is the strategy that Warren Buffett employs, and it has made him, like I said, the third richest man in the world. So he likes to buy, as you can read from his quote, he likes to buy quality businesses when they are selling at a discount price. We will go more into depth. So let's continue. Like, I have been studying the strategies of the best investors in the world for, I believe, like 10 years, or 7 or 10 years now. I started investing 10 years ago, but like 7 years ago, I started to really dive into the strategies of the greatest in the world, like Benjamin Graham, Warren Buffett, Monish Pabrai. Let's see, Paul asks, is this webinar recorded? Yes, you guys will all receive a link to a recorded replay of this webinar. So you can watch it at your own convenience again. And yeah, like besides those people I just mentioned, also Philip Fisher, John Templeton, and many other legendary investors. And the details of their strategies differ definitely, but they all base their decisions on the following two key questions, which are: one, how well is the business performing? So how strong is it? Does it have a lot of debt, or is it making big profit margins, etc.? And the second question is, how much is the business worth? Because if you know how much something is worth, you can check if the current price is below or above what business is actually worth, and then you can determine whether it's cheap or expensive to buy it right now. So those are the two key questions that all these great investors that I just mentioned have in common. This is what they look for. Um, and yeah, so how can we, for example, if we try to answer question one, how well is the business performing? How can we um, figure that out? Well, the key to that is the financial statements of a company. So I will open some websites now and show you where you could get that information. Let's see. So this is one of my favorite websites. It's gurufocus.com. So you see it here at the top, gurufocus.com. And what I like about it is that you can find 10 years of data here. So for example, if we type in Apple, the ticker symbol, AAPL, let's just go to the 10-year financials page. And usually there's a little graph here, but for some reason, oh, and there's also this extremely annoying pop-up, but you'll get used to it. You'll blindly click it away after after a while. So there used to be like a great graph here, but for some weird reason it's not working right now. But as you can see down here, um, there's a ton of data available for this. This is for Apple. So you see the per share data, you see earnings per share, free cash flow per share, all very important metrics, all the ratios like return on equity, net margin. I won't go into extreme detail what they all mean. You can ask me questions about that later if you wish. But suffice to say that this is a lot of data, and you can, from this data, if you know what you're looking for, you can tell if a business is performing well or not. You can see, for example, the revenue. Are they making any revenue at all? What is their net margin? Are they making any profits on that revenue? You know, and also see a trend because you can look at 10 years of historical data, which is great. But as you can also see, it's a bit of a data overload. I mean, where to start? This is just one giant batch of data. But remember this website because this is a really great resource. Uh, then they also have, I might just show you this, the summary tab, which is also interesting. This was a bit more visual, you know. You can see, oh, there's the pop-up again. You can see the green and the red, and if it's red, you can take a better look at it because then it's below average, etc. It's a bit more intuitive maybe, but still, it's a big overload of data. Another website I really like is Google Finance. So google.com/finance. Why I like it is not necessarily because they have the most data. I mean, they do have data. For example, if we go to Apple here, they have financials here on the left. And as you can see, they have, these are the quarterly data. Here you can, in the top, you can select annual data. They have 4 years of data. So it doesn't make a lot of sense to go here. Um, but so I'd recommend you just go to gurufocus.com for the data because they have 10 years. But the stock screener is a great one. So if you go to stock screener, you're interested in finding certain companies. They have a great tool here where you can filter stocks based on different metrics. I won't go into depth here. I mean, I discussed this in my video in my value investing bootcamp video course. But just go here, play around with it, and it's a great website. Um, this is also a website you may have heard me talk about before, jitta.com. They also try the more visual approach to they say growth opportunity, they give it a number, financial strength, they give it a number. It's just it may be a bit more intuitive for some people. If you other premium, I'm just giving you some resources, right? So where you can find some financial data because we're trying to see if a company is performing well, and it's also helps. Always helps to have several resources to check against. And many of you might already be familiar with these websites, but still, I'll just quickly go through them. So morning, let me see, morningstar.com. Also a big one. It's a very premium financial website. I mean, you have to pay for almost everything here, but still, there's some free data available as well. So if we type in Apple again, you see they have the quote here. They have key ratios, which is always interesting to look at. As you can see, they have quite a lot of data as well. Here, all these tabs: growth, cash flow. You can find a lot of um, information here. Uh, Someone is something wrong here. How long is this presentation? This presentation will be about an hour for the guys who are asking. Um, so do I have another one? Yes, I have one more for you, and then we'll get into other stuff. Yahoo, oh, finance.yahoo.com. This was yeah, you can find some interesting data here that you can't really find on other, or at least not. You can find some information here that's not available anywhere else. They have, for example, interesting things about analyst estimates. Obviously, you shouldn't blindly trust analysts, but it's always interesting to see what they are predicting. For example, this is a figure I'd like to look at: the next 5 years, the growth rate they expect the company will have, which is about 13% a year for Apple in this case. You could take that with a grain of salt, so always use a conservative number. Don't just blindly use these numbers, but there's interesting data here. They also have a key statistics page. So check out this website as well. So now I've just given you a couple of great resources that you can use to figure out how well a business is performing. It's all about crunching these numbers and figuring out, is the company profitable? Is the company likely to get in trouble in the near term or not? However, as you can already tell, it's quite a lot of work. There are tremendous amount of data available. There's a massive overload of financial data, and it's easy to get lost in all these numbers and figures. So that's actually the reason, like when I started investing years ago, um, I ran into this problem. I ran into the problem of not knowing what to look for, and whenever if you have so much data available, it's easy to get sidetracked. So you have this great strategy in your head, but then you really like this company. For example, you really like Apple, but when you look at the numbers, it might tell you that it might not be a great bargain anyway. It might, like, the numbers aren't great, but if you look at some other numbers, they might tell you, oh, it is actually a good company if I look at these numbers. So you can cherry pick, and that's not what you want. You want a strict strategy and be consistent with it, because that's the only way you will outperform in the long run, which is what most people are after, I'm guessing. So what I did to solve this issue um, was actually to create a Excel spreadsheet. So I created several Excel spreadsheets, and they all did something else. And I had to input a lot of this data, but at least it was sort of standardized, right? So I could go to all these websites. I could go to Guru Focus. I could go to Google Finance or Yahoo Finance, get all the data I needed, type it over into the Excel spreadsheets, and it would spit out if it was an interesting company or not, if it was profitable or not. However, it was still really time consuming, and I could make a lot of mistakes while typing in all this data. So my solution was to combine all these spreadsheets into one, and then the next step I thought was, okay, this is great. Now I have one Uber spreadsheet, but what if I didn't have to fill in all this data myself manually? That would eliminate a lot of error and a lot of time. And that's exactly what I did. And the result was, drum roll, value spreadsheet. So this is what you're seeing right now. It's version 3.4.4 already. So I made quite a lot of updates to it. Um, this is the result of a lot of hours of work and years of research. And I try to, as I said, the two key questions are how well is the business performing, which is what you see here on the left side. It checks all the most important metrics for which are related to value investing, and it gives you a score for the for how well is the business performing. Uh, 96 out of or sorry 69 out of 100 for Dolby in this case. And the second question also, like how much is the business worth, is also answered, because on the right here you see that there are three intrinsic value models integrated into this spreadsheet. And um, so in one overview, you get an answer to the two most important questions for value investors. So I will show it to you in action. I have to log in by clicking this big yellow button. It says on the right, welcome, you can now use the spreadsheet. Well, let's see if that is true. So I'll fill in Apple here, see what happens. As you can see, it's loading the data now. It's grabbing it online, and this is the result. So as you can see, it's just a matter of seconds, and it has drawn in all financial statements data, which you can see on the tab here, financial statements. It has gotten this information from Google Finance. Is more data on the inputs tab. As you can see, it gets the earnings per share, the analyst estimates. It gets this from Yahoo Finance, as you can see here in the top. I mean, this is also the benefit of a spreadsheet, right? You can alter everything that you want, because um, they're all just formulas. And if you don't like the formula I use, you can just edit it. You know, it's very flexible. You can adapt it to your own wishes. And as you can see here down here, there's 10 years of key ratios. So you have the return on equity, net profit margin, debt to equity. Like debt to equity tells you how much debt the company has in relation to the amount of equity as it has, and it tells you a lot about how leveraged the company is. So is it able to self-fund, or does it rely heavily on debt and therefore have massive interest rate exposure, etc. So all these metrics are chosen not randomly, because there are many metrics out there, like like you just saw on, for example, the Guru Focus website. So the reason I went for these specific metrics is because this is what I figured out after years of analyzing the biggest investors in the world, that these are the metrics that count, you know. And obviously you could add more metrics to this. There are probably people out there watching right now and thinking, oh, but why doesn't he include this and this metric? Well, it might add something, but if you focus on just these, you'll do really well for yourself. For example, return on equity. I know it's not a perfect metric, but it is extremely. It's like the 80-20 principle. I don't know if many people heard about it. It's like the 20%. If you focus on the important 20% that gets 80% of the results, obviously there's 80% more that you can look for, but it gives you only 20% of the results, and it does potentially confuse you and gets you sidetracked. So just focus on what's really important, the key metrics. Then there is, yeah, so Jericho asks, are the spreadsheets customizable? That is definitely the case. Like I told you, as here in the top, you can just see the formula. So if I press on here, a new cell, you can just see the formulas in the top. You can change them to whatever you would like. I don't know what this thing here is doing. What can this do with that? So, yeah, so it's highly customizable. Also here at the top, you can see several things that are used by the calculations in the spreadsheet. So the margin of safety is a principle that is a key principle in value investing, which states that you should always um, take a conservative estimate. So, like I told you, if an analyst predicts that the company will grow 10% a year for the next 5 years, you shouldn't use 10% in your calculations. You're better off using 7.5 or even 5% just to be on the conservative side. Um, then Fabian asks, why does it only work with US listed companies? The reason is because all the resources I just showed you, Guru Focus, Google Finance, Yahoo Finance, they're all focused on, excuse me, on US listed stocks. So there's a tremendous amount of data available, freely available for US listed stocks, and it's much harder to get that same data for other countries. So that's why it works for US listed stocks right now. Um, so let's see if there are other questions. If data is missing from Google Finance, can you go in and put the numbers? Yeah, well, in theory, you could input all the data manually and then it will work as well. I wouldn't recommend it though because it draws in like a tremendous amount of data. Um, and as you can see here, just the 10 years of key ratios and all these financial statement data, it will be a lot of work to do that manually. But in theory, yes, that you could do that. Then for the people who are less experienced with investing, this page might be interesting. It's the fundamental analysis page of the spreadsheet. What you can see here are all the key metrics that it checks, and it also gives you a judgment plus a little explanation. So return on equity for Apple is 35%, which is considered good, and then you can see why. So return on equity is consistently high. The company capital is invested profitably. So this is a great way for people who might not know what all these things are to actually get a rationalization for why something is good or why something is bad. So if we see, for example, the current ratio is average. If it's above 2, that is what you are hoping for. For Apple, it's 1.13, which is average. It's not bad. It's decent. The company is able to pay its obligations, but it's not great. So this is really an interesting page for people who own, yeah, who are still learning, or even people who just want to have a quick recheck if if they know what they're talking about. Let's see if there are some questions. Will this system work better than just buying index funds? Well, for the majority of people, I would recommend index funds, unless you are willing to put some effort into it. And if you know yourself that you might um, freak out if your savings or your investments go down in price, if you don't think you'll be able to handle that, then yeah, I would stick to a regular index funds pattern. But if you want to get above average returns consistently, earn the highest possible returns with the least amount of risk, and yeah, just compound your returns over time, then value investing is the way to go. It is the strategy that all the greatest investors in the world use, and that's also what this spreadsheet is based on. So, Sadiq, what do you think about net debt to EBITDA ratio? Yeah, it's also a good ratio. Debt to equity is already included. This one is a bit different, but still, it's just it is a minor tweak of the same idea. And you know, I've chosen debt to equity. Uh, Again, it's not a perfect metric, but that's why you check several other ones. Yeah, if this is a metric you like, you could use that as well. In the end, it gives about the same result. So why does the discounted cash flow on Guru Focus differ with your spreadsheet? That's a great question here, Vic. The reason is very simple. It's because it's not like valuing a company is not science, it's an art almost, because there is no perfect valuation model. They're all estimates and they're all based on different assumptions. And that's the reason why three different valuation models are included in this spreadsheet. So I'll quickly show you the price earnings valuation model, which you can see here. By the way, these orange fields are override fields. So if you think that the value that is on this field is incorrect, you could fill in, for example, 10. As you can see at the top, the value changes. So it is highly customizable without you having to hack the whole whole spreadsheet. Then there's the discounted cash flow model. Indeed, there's also a reverse discounted cash flow included, which sort of gives you an idea of, based on the current price, what kind of growth rate is priced into the stock right now, which is 14.75% for Apple in this case. And there's a return on equity valuation model. They're all explained in my How to Value Stocks ebook, by the way, which is part of the bootcamp video course, and you also receive it when you register for my email list on valuespreadsheet.com. So yeah, let's see, where were we with the questions? Wow, this is awesome. What's the margin between good and bad for return on equity? Well, generally, I'm looking for companies with a return on equity of at least 15% or higher. And it should have been consistently above 15%, but I actually prefer companies with 20% or higher return on equity. So if it's below 15, it's becoming a problem. So let's see, if a non-American company which exists on Yahoo Finance can be extracted into the spreadsheet by Umesh asked that. Well, the thing is, because the spreadsheet uses several different sources, even if a company is listed on Yahoo Finance, it might not be listed on Google Finance, for example, and so the spreadsheet won't work. So in the end, it is for American companies. It works best. There might be a couple companies that will actually work, for example, from Canada or something, but just, you know, it works best for US listed companies. I'm not able to see the video. Hunzer, if you try to just leave the room and enter it again, see if it works then, because I think all the other people are able to see it, right? What about the management performance? That's a great question, Alejandro, because that is an important thing to check for as well. Um, Obviously, a spreadsheet is quantitative, which means it crunches numbers. And checking if management is performing well is something qualitative. So the spreadsheet is a great starting point for your analysis and very quick way to do it as well. But you will also have to do a little bit of manual work afterwards. But it's a very quick way to check, like, is this stock worth my time at all? You know, is it even worth checking management performance, or is the stock already are the fundamentals already so bad that I don't even have to spend a minute on it because it sucks, you know. So does this sheet work for other countries? No, it works for U.S. listed stocks right now. Let me show you another page which I personally really like. It's one I use a lot. It's the graphs page. So it gives you a visual way to look to see what a company is doing. So this first graph combines earnings per share and free cash flow per share. Why the two in one chart? Well, people who've done my video course know that there is a relation between these two. So if free cash flow is consistently lower than the earnings per share, then this is an unsustainable situation and the company might be manipulating its earnings. So that's why I put them both in one chart. You got the return on equity. So this is all 10 years of data. You can see the book value of Apple, net profit margin, nice. There's a little trend line as well. Um, what else can I tell you about this? The current ratio is going down but still they have so much cash, so it's all right. You see that they are repurchasing shares because the shares outstanding are going down. They increase their dividend payments and they increase some debt to repurchase shares. So this is just a very simple, quick way to see if everything is all right. Like if the net profit margin is going this way, downwards, then you have a problem. Then let me quickly show you the final. Then we can analyze some stocks. So we got the financial health page. On my blog, I've written, you can see the link down here, about earnings manipulation, which is a very important thing to watch out for. So company might be showing profitable figures, but maybe um, it is manipulating these figures, so it's actually making a loss while all the figures seem to be just fine. Well, this guy, Hewitt Heiserman, you should look him up. He has written a book called It's Earnings That Count, and in that he devised a method to figure out in advance, so before the company actually goes bankrupt, to see what if it's at risk of going bankrupt. So you should actually read this article or read this book to know what we're talking about here. But it suffices to say that, for example, what I just mentioned, that accrual profit is actually just earnings per share, and this defensive profit, this is just his terminology. It's actually sort of like free cash flow. So if what you're looking for is free cash flow that is higher than, or at least in line with, the earnings per share. If they differ a lot, then yeah, the company might be in trouble soon because they will run out of cash at some point. So now you've seen like all the pages of the spreadsheet. I'm sorry if I'm going through it really quickly, but we only have an hour, and I would like to analyze some stocks for you as well, just so you can see how fast it works. Let me first see if there are any questions. What is the minimum score that you look for? Well, I actually prefer stocks that have an 80 or higher, um, just because I only have a couple stocks in my portfolio. Okay, so I always have 10 or less stocks in my portfolio. So I don't need like a ton of stock ideas. If I have one every 2 months or even less, that's fine, because I hold stocks for the long run. So I can be picky, and being picky means that you want to go for the creme de la creme, So if you have a choice, purchase a stock with a score of 90 instead of one with a score of 80. Although you shouldn't just blindly go for this score, because also you see, for example, the current ratio, right? It's average, so it doesn't get the greatest score in the world. By the way, let me quickly explain this system here, because as you can see, some weights you can assign weight to each of these things that it checks, all of these financial figures it checks. So, for example, if the net margin is really not important to you, then you give it a weight of 0, which removes it from the scoring system. And as you can see, the score goes up because net margin wasn't amazing in this case, so it pulled the score down. But if you remove it from the score, it it's just it doesn't impact the score anymore. Or you can assign a bigger weight to it, and then you see it pulls the score a bit down. So you can actually tweak this, because I figured out that, yeah, I made this spreadsheet, it works great, but I made it for me initially, so it's based on my strategy. So if other people check different metrics, then yeah, you can just tweak it to your own liking. Um, Let me see, where are we? Other questions? Oh, which parameters do you use on stock filters? Your first selection of stocks. Well, Fernando, I've written an article on my website, valuespreadsheet.com. I'll quickly show you, valuespreadsheet.com. I recommend every one of you reads it because it just gives you a general idea of how to find interesting stocks. Let's see, how to find undervalued stocks in 3 simple steps. Just read this article and you'll see like the basic criteria I use in my stock screener. So for example, return on equity higher than 15%, debt to equity lower than zero point 0.5, and current ratio of 2 or higher. That's what I use in my stock screeners. So let's see other questions. What do you think about cash flow to invest capital? Yeah. Um, yeah. I just use free cash flow. I mean, I don't have an opinion about cash flow to invested capital. It might be a great metric, but yeah, I use free cash flow and it works. So um, yeah, James, what does it cost to subscribe? I'll get to that in a couple minutes. Similar question: do you plan to create a spreadsheet that can analyze European companies as well? Would love to do that. Will be a tremendous amount of work, and I don't know if it will work at all because Europe is splintered. That every country has their own financial websites, and I will have to link all of them together, which will be a monumental task. So I don't think that will happen anytime soon. How can you access the spreadsheet? I'll just show it to you right now on the site. I'll display the offer that I want to make to you later on. You can get $100 off. It's on the right side. I'll also paste the link. See, so you guys can just check it out while I'll just keep jabbering away. Let's see. 1 second, guys. Okay, so I pasted the link at the top of the chat box, so you can check out the spreadsheet if you want. Other questions? Have to go soon. Thanks for the webinar. Thanks for being here, Thomas. How do you access the spreadsheet? Can you analyze financial stocks? Well, financial stocks are a different breed, so they like not many of the they have very complex and difficult financial statements. So it's not you can input them in the spreadsheets. So but it's not perfect for financial stocks now. Berkshire, like my Udemy course would be enough to get the basics from you. Should I look for some more info? You can like the Udemy course is definitely more than enough to learn everything you need to know about value investing. But I suggest you just subscribe to my email list so you can get all the extra free, totally free information every week in your mailbox. I use this DCF model, calculate free cash flow. Growth rate. Ooh, let me see. Shall we just start because there are a lot of questions now? Uh, I just want to analyze a couple stocks for you and then make you an offer, and then after that, so at around 8 o'clock, we'll start with answering all the questions, all right? Because some people might have to leave, and I still would like to show you. So can you guys shout out some US listed stocks that you want me to analyze? I could start, for example. Let me see. Did someone already say something? Mm, Skyworks Solution, SWKS. Let me see. Okay, SWKS. Let's see what happens. Skyworks Solutions. Wow, that's a 90, which is great. So what we see here, it says return on equity inconsistent. So let's have a look at the graph to see why it says that. What we see here is that return on equity is actually good right now, so it's close to 20%. but it has been lower. It has been around 10. So it hasn't been consistently high. That's why it says inconsistent. Oh my, I see a lot of stocks coming in now. I will definitely not be able to cover all of them, but I'll just quickly go through a couple. Yeah, so this stocks actually look really interesting. Let's see if there's anything else we can quickly look at. So the valuation, what we see is that these two valuation models give, let's say, an average of, um, well, I think around 120. So I fill that in here. What we see that based on that uh, intrinsic value, stock is undervalued 24% right now, which gives you an expected rate of return if you purchase it at the current price of around 13%, which is decent, but I personally look for 20% or higher expected return. So it is definitely a stock you could put on your watch list. It's not a stock I would purchase at the current price. The return on equity model gives a very weird valuation. Let me see why that is. Hmm, Well, probably because, well, so this is why I integrated three different valuation models, so you can always compare them. And also, someone said it as well, like gurufocus.com. If you go to, let me see, DCF, you can also get an analysis done here. So if we look, and also the website jitta.com that I showed you also shows you a price. Here it says this line is the valuation line, so you can compare to get to a reasonable estimate. So let's quickly go to another one. I'll just randomly pick one, okay? So I'll just get one because many people inputted all the stocks. I'm not able to check them all. Honeywell International. Oh, you guys are giving pretty good stocks actually. Like the score is decent here as well. So again, like what we see here is the valuation models um, are close to the current share price. So with what this means is that there's not probably not much upside potential for this particular company. So even if it has a good fundamental score, if the price is not right, you shouldn't buy it right now. Let's see, Marshall Club. Many of those companies I've never heard of, so it's interesting to check them out. So this is a different breed. You see, score 3.6. Everything is in the red. So let's see what happens here. Return on equity. It has a big dip here. So this is a really bad sign. You see that the trend of the book value per share is going down, which is obviously the last couple of years it's going up again a little bit, but this downward trend is definitely something to watch out for. Um, Also, shares outstanding is going up, so it means that there's the big share dilution going on here. Yeah, I would stay away from this company definitely. Can you analyze North? Yes, I can. North National Oil Well Fargo, I believe. Yes, it's an oil company. Yeah. So, all right. If we look at the financial health tab for this one, let me see. So, yeah, free cash flow has been a bit lower. Like this is a bad sign as well. The Altman set score. Altman set score is a score which is also indicative if a company is about to go bankrupt or not. And yeah, this score is not a great score. You would like a score above 3. So I'm not a huge fan of these figures. Also, valuation models value it at an average price of 45 or an average value of 45. The price is currently 51, so it's overvalued. I wouldn't buy this stock. So as you can see, it's very difficult to find a good stock that is both scoring high on the fundamentals and is also cheap. Charles, bye. Thank you for being here. You have to go, I see. Um, uh, so Thomas says, like, do large differences in valuation estimates make little sense? I mean, shouldn't we aim for similar estimates for each model? Well, all of these three models use completely different ways to arrive at their estimate, and that's why it allows you to compare and get a like a ballpark figure. There is no perfect valuation model, and by using three, they balance each other out. So Jericho asks if Kraft. Quickly check. You outperform the market by how much? Well, ooh, uh, this is not a great company if I look at these figures, and it's definitely overvalued. You outperform the market by how much? Well, I've earned. I can show you later on, but I've earned around 20% a year for the last 5 years. So yeah, that is a decent return, I guess. So yeah, let me just quickly go. You've seen how easy it is to analyze a stock. I mean, I can just run a couple of them through here quickly without actually going into a lot of detail. I'll just show you the results. EMR. Someone said that CA. See, it just takes a couple seconds for all the data to load, and you'll get an instant analysis, and you can check out the graphs, and you have all the data at your disposal. So it's really, really quickly. It can definitely speed up um, your analysis process. So I'll just quickly run a couple through them, just like two, three more. This is a decent one. Swear. Yeah, the estimate is unreliable. What this means is that there's just a too big discrepancy between the valuation estimate, so you can't really rely on the average, because they're just too far apart. That's about it. That's why it says that it's unreliable. So let me just. Okay, so as you can see, it's really, really quick. Um, this is a company I like. Just enter it. As you can see, a score of 94. This is a great one. You might want to take a look at this one, and it's a little bit undervalued as well. So, Bed Bath and Beyond. My little tip for you: just check it out. Don't just blindly buy it, but check it out. Okay, let's go back now for a sec to the presentation. Hmm. Yeah, so what you've seen is my premium value spreadsheet. It contains three valuation models. It's 100% unlocked, which means that you can change every single formula that's in there or add your own formulas to it, whatever you want. There's fundamental analysis built into it, so you get an instant analysis of a stock within seconds, as you saw, literally just a couple seconds. You only have to enter the ticker symbol, and the spreadsheet does the rest. There are all these financial graphs included, so which gives you like a nice um, uh, visual way to instantly see what is going well and what isn't going so well with the company and what the trends are. You'll get free updates, so whenever I bring out an update, you'll get it in your email or you know. So it will be running and new features will be added, and you can always contact me and I'll answer within a day usually. So the regular price for this is 297. Or sorry, yeah, did I say that correctly? 297. Yeah, per year, which is in my opinion, a great price. If you look at the, oh, sorry, per year, it's actually I made a little mistake there because it's actually 297 for lifetime access, and which is great price already if you look at competitors which charge around 400 or 500 and you have to pay that annually. So what I can offer you is uh, a reduction of $100 off. So only now you can get lifetime access for just 197, um, which is even less money. And this offer, you can get it by going to valuespreadsheet.com/deal, and it is available for 72 hours only. I recommend, if you're even slightly interested in getting it, if you're like intrigued by what I showed you, what it can do for you, then get it within the next 72 hours, because I don't do these webinars often and I don't make these offers very often. So yeah, I recommend. This is a great deal. It's not a lot of money. Well, it is a lot of money. I do admit that. But the fact is that if you purchase even one good stock, or avoid buying one bad stock, you will have earned this money back several fold. And um, I made this spreadsheet for myself initially, so I had no intention of selling it. But then I figured out that many people might benefit from it, and then it took me a lot of time and to actually make it available to the public. There's just years of work into this, and I use it for every single decision that I make. I have purchased all my stocks based on the results of this spreadsheet, and as I said, I have earned really decent returns of around 20% a year, um, which and consistently. So I truly believe I wouldn't. If you've been following my email newsletter, you know that I don't push any of my products. I don't try to sell stuff, but I do. So when I do, I only do that because I truly believe it is of value to you. And again, this spreadsheet has worked for me, and I have hundreds of clients already that are very happy with this product. And so give it a go. I mean, there is a 7-day money back guarantee, so if you don't like it, just let me know and I'll give you your money back straight away. Um, there are some tutorials on my website as well, where you can, learn how to use it. And if you don't know, if you can't figure it out, I mean, I can't believe that you can't figure it out, because you only have to enter the ticker symbol. But still, if you have any questions at all, just feel free to email me. Also, if you have questions before purchasing this, just send me an email, nick@valuespreadsheet.com, and I'll be glad to help you out. So let's see if there are any other questions I can answer while we are. Um, let's see, 1 second. To see what question we've already answered. So, could you talk about the free updates version for live? Uh, yeah, sure. I mean, free updates mean that whenever the spreadsheet stops working, I'll fix it again. And if any new features become available, everyone receives them free of charge. So that's about the free updates. There's step by step on how to use it. Definitely, there are tutorials on my website. Once you purchase it, you'll get a link to it, so you can check them out, how to use the spreadsheet, or you can just send me an email. What about your course? Any special offers there? Not right now. Maybe in the next webinar, I'll make an offer for the value investing bootcamp. And what Nirbik asks, what is the difference between the bootcamp and this spreadsheet, this premium spreadsheet? Well, the bootcamp is a video course. It teaches you how to like the ins and outs of value investing. So the strategy of Warren Buffett and all the other great investors. It does not include this spreadsheet. This spreadsheet, like the bootcamp, gives you a great. It teaches you everything you need to know about value investing, but still you will have to do everything and have to apply all that knowledge manually. You have to do all your analysis manually and in a time-consuming fashion. If you really want to analyze stocks quickly, like you just saw in mere seconds, then this spreadsheet is for you. You know. So that's a difference. Do we get the spreadsheet with the bootcamp? Nope. There is definitely a spreadsheet included with the bootcamp, but not this one. It's just you can calculate the intrinsic value with that spreadsheet, but it's manual input of data, not automated like this one. How does this compare to the old school value spreadsheet? Mark asks. Good question. This one works in Google Spreadsheets, so it's in your browser, which means you can access it from any device with an internet connection. It also works on your mobile phone, on your tablet, on your Mac, while the old school value spreadsheet is built in Excel. It requires installation of all kinds of weird plugins, and it only works on Windows. So that's a big difference. Other than that, it's also focused on value investing. It's just, in my opinion, a bit more complex. There's more data in it, which might be more confusing. Let me see. Do you have a special rate for students? Well, this is the special rate, I'm afraid. The 197 is the best I can do right now. Does the spreadsheet use data sources that charge a premium? Right now it doesn't. I might switch at some point to a dedicated data source, but for now it's just taking all the data from Google Finance and all the big financial websites, the reliable financial websites. How do you deal with currency risk if you only invest in US listed companies but you live in Amsterdam? I try not to worry too much about currency risk. I earn some of my money in dollars. I earn another part of my money in euro. So it sort of evens out, you know? With investing, I try to focus on individual companies and try to sort of forget about the whole macro aspect and like interest rates and currency and oil price. I mean, it has an effect definitely, but it's unpredictable. So you might as well focus on what's important, and that's buying great companies at a discount price. Let me see. Does it work with Apple? Yes, it does. It definitely does. Uh, Let me see. What else? Do you still write a monthly blog? No. Well, I'm sorry, but no, I don't write a monthly. I try to write. I try to create some content every once in a while, still, but not as actively as I used to anymore. Like writing blog posts, etc. Um, Let me see. Also, it's not just because I don't want to, but it's also the fact that I've written so many articles on my website. I created the entire bootcamp video course. I wrote dozens of email newsletters, which are all available for free, except the video course. But at some point, like you've said everything there is to say about value investing, you know. So all the information is out there, and if something is missing, I'll add it. But until then, I mean, all the information is there. I hate repeating myself. That's one of the things. So I don't. I've already written an article. If I've already written a good article on intrinsic value, I won't write another one just to have an extra blog post. You know. Um, can you review? Yeah, I'll review a couple other stocks in a minute. I'll just answer some questions. What if your website goes down or you decide to close the business? Well, that's a great question. I get that every time I do an offer like this. The only thing I can say is that I will do my best to keep this alive because I love this business and I really believe in this product. And as long as I will keep analyzing stocks, I will keep updating this spreadsheet, you know, and I will probably be investing for the rest of my life. So that's one sort of guarantee. On the other hand, if you buy a car and the car company goes bankrupt or something, you know, what happens then if they close shop? So it's just the same with any other business. Where does the data come from? Like from the big financial websites. So Google Finance, Yahoo Finance, Guru Focus, Morningstar, those kind of sources. I really enjoy learning from you. Well, thanks, Rusvan. That's always nice to hear. Sound is off. Is it really? I think many people still hear me, right? So how do you value European companies if the spreadsheet doesn't work for European stocks? Well, you might call me lazy, but that's why I stick to to US listed stocks because of the reason that I can actually analyze them with my spreadsheet, and it just saves me so much time. Is definitely I will definitely miss some great opportunities in Europe because of that. But I mean, the universe of stocks in the US is so big already. I mean, if I really run out of ideas, I'll definitely look at Europe, and I am subscribed to some European investment newsletters. So I do still have some information on that front, but my spreadsheet doesn't work there, and I do really rely on the information I get from the spreadsheet. Is cash is king the policy of value investing? That's a good question. Um, Cash is great. I mean, who doesn't love a big pile of cash laying around? But on the other hand, Apple has a tremendous mountain of cash, and still it takes on extra debt because the cash is stored in other countries. And if they want to use that cash, they first have to transfer it to the US, which means they have to pay taxes. And they don't want that. So it's cheaper for them to actually get into debt and use that debt to repurchase shares. But yeah, cash is obviously like cash is king. I mean, what is the alternative? Cash is great, but it's not just about cash because if you have like a billion in cash but 2 billion in debt, you know, it's all relative. Can you confirm it if it is possible to make it work on Canadian stocks? Well, in theory, you could make it work for Canadian stocks, but you will have to do a lot of um, yeah, of tweaking. I mean, you can change every single formula in there, uh, but yeah, as I said, I won't make it available for Canadian stocks, and I can't promise you that it will work for Canadian stocks. In theory, it could, but it will require a lot of work. So for now, it works for US listed stocks only. Thanks for being here, Fabian. Thanks for being here. Do you invest in small caps? Absolutely, Fernando. I mean, I love small caps because they are undervalued or underfollowed. So there is obviously a big chance there because big opportunities there. Like if fewer people and fewer analysts follow a stock, there is a bigger chance that there will be a discrepancy between price and value. So resulting in very cheap stocks, unrealistically cheap stocks, which you can buy for a fraction of what they're worth. So yeah, I love small caps. What is the difference between your product and Guru Focus? Well, it's tweakable for one. So you can change every formula, you can tweak some of the inputs. So it's highly customizable, while Guru Focus is just static. It just dumps a whole bunch of data on your screen and you have to figure it out yourself. Also, the spreadsheet, let me put it on the screen again. It is the spreadsheet. In one overview, you get an answer to the two most important questions. How well is the business performing? Well, look at this score and it tells you. Second question, is the company currently cheap or not? Well, it says here, undervalued by 26%. You know, so it's just in one overview, you have an answer to the two most important questions in investing. And that's not what you get from gurufocus.com. Because there you just get a whole bunch of data and you have to figure it out yourself. Edward, thanks for being here. Uh, Thanks for this. Good day. Bye, David. Thanks for being here as well. What if I own stocks that do not meet the value parameters but are doing very well? Well, that's definitely possible. Um, However, we are not like that will be you'll be lucky if you buy a bad company and it happens to do well. That's not a long-term strategy that will consistently help you outperform. You know, if you want to consistently outperform and take the least amount of risk, you'll have to buy very financially strong companies at a very cheap price. If you keep doing that consistently, you will do really, really well for yourself. And yeah, the spreadsheet can really help you with that. So let me see. Other people are leaving. Um, you have a link to watch the webinar again. Yes, you'll receive it in your email tomorrow. Replay link. Can this be used on Asian stocks? No, it cannot. Lewis, very interesting webinar on spreadsheet. Could you please remind me the webinar you mentioned earlier to check value information? The website. Yeah, Louis, I'll just quickly mention them again. It's gurufocus.com, finance.yahoo.com, google.com/finance, jitta.com, and I think those were all the sites we mentioned. Stock screening, that's something, Dave, that as I showed you, I do on Yahoo Finance, or sorry, Google Finance. That's the stock screener I prefer to use. It's very simple and it does its job. So let me see. What other questions? Great webinar, but need to go. Okay. Bye bye. Does the spreadsheet mention cutoff values for important ratios for minimum score of? Well, the cutoff values are sort of integrated, as in if it's below a certain threshold, it will turn red, and otherwise it will be green or yellow, if it's average. So all those cutoff values are integrated in this color coding and system, actually. That's the thank you, Nick. Really appreciate it. Okay, thank you for being here. What about growth rate? The growth rate. So the growth rate that the spreadsheet uses several growth rates, actually. The first one it uses is the 5-year estimate from Yahoo Finance analysts, and then in the calculations itself, it actually takes that growth rate, applies a margin of safety, and then uses a more conservative figure. And for the return on equity model, it actually uses a sustainable growth rate, which is calculated in a different way, just for so it balances out. So if the analysts are completely wrong, you still have another way to calculate the growth rate. If we take you with your online course, can you use the spreadsheet to go along the course? That absolutely. I mean, in fact, I would recommend people to first take the video course to learn what value investing is all about, so you know actually what all of these figures mean and why they are in there, why they are so important, and then you'll be way better at using this spreadsheet. So what other analysis do I do on the stocks after I run them through the spreadsheet? Well, it depends. I check, um, I read up on the news around that stock, so the latest news. I usually find that on Google Finance here. As you can see here on the right, there's all the latest news about the stock. Oh yeah, one website I forgot about, which I really, really like, it's a weird name. It's called fool.com. It's the Motley Fool. And so if I look for Apple here, for example, what's so cool about this website, and I always check this website before purchasing. Oh, I'm not logged in. Let me quickly see if I can log in. Okay, try again. 1 second, guys. Almost there. Because what's so cool, they have a investment community here, and so they use the wisdom of the crowd. So here, 30,000 people have said that Apple will outperform in the next 5 years, while 2,000 people have said it will underperform. And then also, what's even more interesting is here down here, people leave comments on why they think that, and some of the comments get voted up. You can see you can read some background information, and sometimes you can read information. This is a whole big story, and often there's information in those comments that you won't find anywhere else. Sometimes it's even an employee of the company that shares inside information. I mean, it's very interesting website to check. So this is definitely something I do after I run the spreadsheet through the software. I also check the news. Also check how management is performing, if they are trustworthy and shareholder friendly. So that's yeah, that's what I do. So John, thanks very much. Enjoying it as well. Okay, bye, John. Thanks, Robert, for being here. Manuel, I currently have the old version. Yeah, if you want the new version, yeah, I'll just type the link out. Valuespreadsheet.com/app. So Emmanuel. So Emmanuel, I pasted the link in the chat, so you can get the version 3.4.4. To value the stocks, you need the growth rate for. Where does the spreadsheet pull that data from? Cost of equity. Yeah, we don't use the cost of equity in this particular discounted cash flow model, Siddiq. We use a simple growth rate instead. Do you have user reviews? Absolutely. If you click on the link, like valuespreadsheet.com/big deal, you'll see reviews on that page from yeah from actual customers. Um, so thank you. I completed your bootcamp course in one sitting. Wow, it's a impressive feat. Can you check G Pro? Oh, GoPro. Is that a GoPro ticker symbol? I'm using GoPros a lot lately, so yeah, it probably doesn't have enough data available yet, so that's why it's giving a little error here. So I'm sorry, I can't really analyze that one yet because it doesn't have enough data. So what's your opinion about the PEG ratio? Well, I'm not a huge fan of the PEG ratio because many people ask me about it, I included it in the here PEG ratio. I included it in the spreadsheet. I just gave it a weight of 1, as you can see, so I don't put a lot of importance on it. Do I need to be subscriber to get the 10 years of stock data? Michael, do you mean group focus? I think you don't. No, you can just go there and it's all there. Don't get carried away by people's sentiments. No, that's definitely true, Nirbik. I mean, getting your emotions in the way is is the biggest problem. So that's why you first check in a rational way, like in a systematic way. You check the figures and see if everything's all right. And if everything is all right or seems to be all right, you just get some more information on what other people are thinking about the company on fool.com, for example. But definitely don't get carried away by emotions and by hype and pessimism because that's definitely the downfall of many investors. What rate do you use to discount the cash flow? Oh, I just use the discount rate, which is equal to the average stock market return over the last, well, 100 years, which is around 8-9%. So that's the discount rate I use. But you can change it if you want. I mean, on the inputs tab, I believe it's here, the discount rate, as you can see, 9%. You can change it to whatever you like, and it will include that in the discounted cash flow calculation instead. So it's customizable. Can you please type CCJ? CCJ. Emmanuel, can you send me an email about the update? Because yeah, then I can just talk to you via email and send you the right link, etc. Peter, can you CCJ? I'll just input it quickly. Okay. Russell, yeah, definitely. If you purchase then, you'll like it doesn't like the spreadsheet itself doesn't update automatically. I just create a new version which is updated, and then you can give you a link to it, and you can start using that one instead. You know, that's how an update works. Thanks for the seminar. Thanks, Arthur, for being here. Can you short overvalued stocks? You definitely can. Um, I don't do it myself. I just only go. I'm only long in stocks. Motors. Yeah. So the biggest problem is probably here. What you can see here, it's called something called the debt repayment period. It's as you can see here. So there are all these little text balloons which give you more information on what what this field is actually all about. So here you can see how many years it will take to pay off all debt with defensive profits, which is free cash flow. And as you can see, it will take them 5.7 years based on the current cash flow to pay off all their debt, which is not too great. As you can also see, which you can might be see better in able to see in the graph, free cash flow has been way lower than the earnings per share. So that's definitely something to watch out for. Also, this big year of loss and the declining return on equity is not an amazing sign. Shares outstanding are going up, so not a massive fan just from this first few. THO. Well, Berkshire Siddiq is a bit of a problem to analyze here with this spreadsheet because it has a very weird ticker symbol. So it's BRK.B on, for example, Google Finance, but on Yahoo Finance it's BRK-B. So it doesn't really swallow that, It has to be the same on all those websites for it to work. Um, so what else? I read the article on how to value market. Mentioned not to buy stocks based on market value, but is it really worthwhile not to enter the market at current levels? Yeah, indeed. The article actually explains all my views on the current state of the market and if it's overvalued or undervalued and what you should do. Um, yeah, I mean, definitely job data and the Fed and whatever. I mean, those are things that are outside of everyone's control. The only thing that you can control is your own decision, and your own decision should be based on the fundamentals and the price of an individual company. And also, if you read Warren Buffett's letters to Berkshire shareholders, he just keeps repeating that he largely ignores the world news. He largely ignores big indicators like jobs or interest rates or inflation. Again, they do have an impact, but they are completely unpredictable. So why even try? Just focus on what you know that works, and that is buying great companies at a cheap price. So that's my answer to that. Why don't you offer a combo spreadsheet plus course? That's a great idea. I haven't even thought of that, at least not for this particular thingy. Also, because many of the people who are watching actually already have taken the course, so that might also be a reason why it's. But yeah, I might consider it next time. So IDCC. Check. Um, Let me see. IDCC. Well, this is actually a decent. You see, the valuations are widely apart, so you'll have to check why that is. We can have a quick look. Price earnings valuation. Industry average 22. Seems alright. Expected growth rate's quite high. Discounted cash flow. Yeah, it has a really good free cash flow, which is why this figure is so high. Seems like a very healthy company actually. Interesting. At least it seems to be very undervalued, but I have to dive into it more. But it seems very interesting at first sight. So how are you able to balance a 40-hour job and all this? Uh, yeah, I mean, in the end, this is part of my job, just to maintain this. So I don't have an actual steady job. I'm an entrepreneur, and I'm not working for a boss. So yeah, I'm able to balance this just fine. Chevron, what is the ticker symbol for that one? Let me check. TVX. Thanks, Emmanuel. Have a great day. Yeah, again, Jack, it's unreliable because if these like here, this figure here, it takes the average, and if they are too far apart, they're unreliable. Uh, you can't rely on that average, so you have to input something here which you think is more realistic. For example, in this case, you could fill in maybe like let's say 100, and it uses that instead. So that's the unreliable thing. So let's just answer a couple questions, and then I'm. Why does it say? Yeah, I already explained. Anyways, I'll just input LW. I'll just quickly run them through it. Not a great fan of this. You currently have 92 positions. Wow, that's a lot, man. Yeah, like I said, I have 10 positions myself, so that's a lot, 92. You could definitely like it's so quick to analyze one stock. You could definitely run all 92 of them through it within an hour. So I would definitely consider that, yeah, and then reconsider some of those positions probably because they won't all be great companies. I'm sure of it because really great companies are rare. So again, this is the offer. It's valid for 72 hours only. $100 off, lifetime access. There's a 7-day money back guarantee, so no worries. Just send me an email or if you have questions or if you want your money back, and I'll just give you your money back straight away because I only want happy customers. And so, yeah, thank you all for being here. Thank you all for being so interactive and asking all these questions. It was very, very fun, a lot of fun for me to do this. It's been a while, so thank you for being here. So go to valuespreadsheet.com/big deal if you're interested in this offer. And yeah, again, thank you so much for being here. I really appreciate it. So I'll just redirect you guys and have a great day and a great evening. Bye bye.